through the COVID pandemic, we'll know future is going to be, as someone from a college told me, we've heard of woke uh, politics, we've heard of woke thinking, but future, they said post-pandemic, is going to be VUCA. I didn't get what they were trying to tell me. Then they said it's VUCA. I said, all right, what is VUCA? Volatile, uncertain, complex, and totally ambiguous. If VUCA is what it is going to be for the future of finance, therefore, is going to be even more VUCA. Very difficult for any one of us to put a finger on any one aspect of finance and say this is how it is going to be. But yet we'll all have to think within the available parameters, plan, and also be ready to prevent any black swan events. So when you're talking about future particularly of future of finance, there is definitely a sense of urgency with which we need to plan for something which is going to be highly volatile and also be more influenced by extraneous factors for each one of us, extraneous for each one of us, and therefore be sure that we are able to plan it in such a way that we can face any eventuality. So that's not to sound cynical or gloomy, but we are only 2 years or even 1 year after the COVID, and therefore it's just not yet time for us to forget COVID or forget uncertainties. And therefore we'll still have to be to that extent cautious without sounding cynical. After all, ultimately we are looking at economic stability. We're also wanting to preserve national security and make sure that climate risks are not going to hit us, because we are talking about a future which is going to be digital. And that is the reason why I bring national security. I also bring in cybersecurity into it. And absolutely one particular personalized concern for all of us would be data security. So even as we see the potential of digitizing most aspects of our life, and particularly because of the success that we have tasted by bringing in technology into finance, we'll have to ensure that the three securities are in place in our planning. The digital personal data security, national security, because if you leave it too much in the gray, you're not sure about the money trail, and cyber security, because you want to continue being in safe environment even as you bring in digital. I'm glad in India we've shown a tendency to very quickly adapt to technology. So the voices which were earlier heard saying there's no point in us rushing into this because you think people in the tier 2, tier 3 cities will be ready to adapt or not. Rural folk, as we like to, with a sense of condescension, refer to the people in the rural areas. Are they going to be ready for digital adaptation? Have all been questions which the people of India themselves have answered. In the last 2 years, the extent to which digitization has happened, particularly in the payment portals, assures us that adaptation by people of India is one of those exemplar cases which very many countries are surprised to see that this scaling up has happened in the digital introduction into the financial world. As a result, we find that there is definitely a big investment layer which is growing in the technology side of things. Investments into technologies, investments particularly those technologies which are going to influence fintech, are rapidly growing, and they vary not just for one aspect of technology but across the board. The use of blockchain technology is expected to rise, I'm told, by about 46% within the next 4 years. Now, if that is the rate at which blockchain technology is going to receive investments, there's scope for understanding how this is going to drive growth. And therefore, all of us will have to be sort of readied for investment and also the fallout or the spillovers of this investment affecting other areas. Investors also are looking at investing in not so traditional areas. The traditional areas have actually laid their own path, and it is very clear where the investment would go, at which level, and at what kind of stage. Whereas the private equity market, which has gone into areas which are now becoming very innovative, has only tripled in the last decade, between 2010 and 2021. 2 trillion US dollars was the figure in private equity for in 2010, whereas you're looking at 6 trillion in 2021. If this is the way private equity has come out in terms of the total numbers, we also see that private equity has played that role of, out of the several startups that we created, within a matter of 2 years, if 100 of them could be evaluated to become unicorns, the support offered by private equity is what has really quickly speeded up their progress to become unicorns, and the valuation methodologies have all been very much reinforced by private equity. So what is this got to say about future of finance? Today, the number of startups and from the tier 2, tier 3 cities is about 40-45%, but 6,636 fintech startups make up for 21 make up for the total number of those in financial area, meaning the total startups of them, you have about 6,636 aiming at financial sector, while 21 unicorns are specific in the fintech area. So you find that the linkage between startups, the unicorns, private equity, and also those which are getting connected to fintech is very clearly established. Startups, the total startups of which those connected to fintech, unicorns, number of unicorns which are very linked to fintech, and also the monies coming to support them from the private equity are all pushing them very quickly in their path of progress. I already spoke about how India has shown the way in our people adapting technology. Even on that, the data is so explicit. While the global average for fintech adoption is about 64%, India's number is 87%. So absolutely across the board, adopting technology is done by all our people. So the progress in terms of digital is only going to be even further accentuated. I see a big role for artificial intelligence in the fintech area, particularly for detecting crime, fraud prevention, quantifying and assessing of risks, so the future of finance can be facilitated and really given a leg up by the use of artificial intelligence. And if we are doing so much of digitalization of our financial industry, banking and others related, you also need to have the technology, and which is what the AI provides you, to make sure that we are able to assess risk better, assess and quantify risks better, make sure that fraud prevention activities are better done and undertaken, and easily analyze trends and flow, which is a part of our future assessments each time as we look at the way in which businesses can be planned. In the budget of 2022, we had announced that India will be setting up 75 digital banking units. They're called banking units for some reason, but there are going to be 75 of them, and they will be located. Being digital, they can be located anywhere, but symbolically, they are also going to be located in 75 districts uh, by 75 scheduled commercial banks. So 75 digital banking units being set up by in 75 districts by our scheduled commercial banks. So the government's initiative is to spread it in different ways, make it accessible for everybody in different kind of ways, make it accessible in regional languages so that people of all regions and all level of language skills are at ease using them. Of course, you also know that we've announced through the budget a central bank driven digital currency. The, the common parlance, everybody uses cryptocurrency, but currency it cannot be unless it is banked by sovereign institutions. So the announcement distinctly talking about a central bank digital currency was made in this budget, and Reserve Bank, I know, is working on it. We've taken a lot of steps in order that the financial sector is already well into um, use of digital technologies. And that is why today the authentication exercise is lots more electronically driven. The Aadhaar could have been one to start with, where you're not physically expected to be somewhere where your Aadhaar can substitute for you. But subsequently, paperless verification has been brought in because of the eKYC. You can do it electronically. And later, the payments are also not necessarily to be done by cash or you being physically present. That's why you have the UPI, RuPay. So digital is now moving layer after layer where your physical presence wasn't required, your physical verification was not required, and then later you really don't have to deal with physical material, whether it is currency or coin, but do the payment digitally. So India actually has progressed at every level. The digilockers, for instance, which can be put to use as well, has moved at every level towards greater digital approach to payments and financial transactions. There is a central repository which takes care of central KYC, and we are also now working in such a way that once you have given your KYC, it can be applicable at various institutions at various times for various requirements that you may have, and you may not have to do it each time, even if the businesses are slightly different that you are engaged in. So we are trying to bring it all together so that true ease of doing business can happen. So every time digital extension is happening in the name of ease of doing business, you find the financial sector taking precedence. They are the first ones to take it up, or they are the first ones where they get introduced. And in that, the RBI's attempt to give you a sandbox, a controlled environment in which newer innovations, which are all fintech driven, are tested, and then once the success is established there, it is allowed to penetrate further or scale up further, has helped. So once when you're doing it through a sandbox which is provided by the regulator himself, you're able to sure shot come up with innovative solutions which are workable, having been proven in a times tested controlled environment, you're able to scale up. So that way, I think there is a lot of synchronization between regulators. The SEBI also very quickly comes up with notifications to say how this entry of digital can also make the function better. Like for instance, in company affairs, you find that during the pandemic, SEBI very quickly came on board to say the GMs, the general body meetings can be held digitally, virtual transactions or discussions can happen. That helped companies to save on a lot of things and also keep the protocol of COVID intact. So institutions, particularly the regulators today in India, are very adept at understanding the impact of digital ways of doing things. Um, just for data's sake, because that explains the scale that India has achieved. Uh, the data has been released by NPCI that UPI has reported 6.28 billion transactions worth 10.62 trillion rupees in July. Just in July. Just in July, transactions worth 10.62 trillion Indian rupees has been reported through 6.28 billion transactions just in July. So, and if you were to compare between month on month, like last July to this July, it's a 7%. Oh, sorry. If you were to compare it between June of 2022 versus July, the next month of 2022, it's a 7% growth. So on a monthly basis, you're seeing substantial growth in the transactions. In FY22, which is the year which ended March 2022, UPI processed more than 46 billion transactions, amounting to over 84.17 trillion Indian rupees, and it breached the $1 trillion mark in that year. So UPI's own target is to process 1 billion transactions a day in the next 5 years. So it's readying itself for that kind of an escalation in transaction. So India's financial digital performance and the Indian stack that has been created for enabling financial services is now a global uh, branding which most countries with whom we are engaged in, as and when we do in bilateral discussions, this is a matter which comes up automatically with a great sense of appreciation that you could achieve this in India, and we look at it as a global India's own public good, which that Indian stack can now become a global stack as well. Just a few more things which I'll add because we're talking about future of finance. We are looking at ways in which common citizen of India, the small and micro units, MSMEs who do business in different corners of the country, are benefiting from this digital services provided by the banks. Account aggregator, which was announced sometime in September 2021, has actually ramped up so much more, and it provides digital access to MSMEs and others to share information on consent basis. So the financial institutions don't go seeking customers or running uh, from pillar to post saying who can they find who's going to be worthy. Data's up there, and if given the consent, the aggregator who's between the bank and the customer will be able to share the data, and after the consent is obtained, when the data is shared, the customer finds the right bank and the bank finds the worthy customer without much of a physical running around. So this actually is now adopted by about 21 banks, including public sector banks. And this FIP, because they become information providers as well as financial information users. More than 1.1 billion. Again, the scale is what I want you to understand. September 2021 is when it was launched. By the end of July, I know all public sector banks, scheduled commercial banks, had onboarded onto the scheme. Now, 1.1 billion bank accounts are enabled to share data on account aggregator. That's the number we've reached within last September to now. 68 entities are accessing data through account aggregators as either FIUs or FIPs. Also using the digital revolution which is going on, SIDBI, the Investment Development Bank, Small Industries Development Bank, um, has set out a GST Sahay platform. This will help in invoice financing, and it becomes a marketplace on its own, SIDBI Sahay. So small MSMEs whose payments are getting delayed can use this platform and also raise loan. Sizes are so flexible that it can give 10,000 rupees or up to 3 lakhs. So this has also revolutionized the way in which invoices can help be discounted or be used as security for raising loans. So the ways in which India is preparing itself for a future of digitized financing of our economy are all flowering in a way, and people are able to benefit from it. Then, of course, you know the way in which we have digitized the toll plazas. We are able to see how rapidly things have changed in that. Again, a factoid, very useful one, I think. As of December 31st, 2021, collectively banks have issued over 4.42 crores FASTags with an average daily ETC transactions of 76.62 lakhs. The average daily collection through ETC has increased to 118.5 crores with a penetration of 96% in total fee collection. So digitization in the economy happening at different levels, different layers are all playing into the financial sector. And that's how the economy is rapidly moving towards a greater formalization. You are aware we set up a long-term financing institution, the NABFID, National Bank for Financing Infrastructure and Development. It was established in March 2021, and it raises long-term funds, resources for funding infrastructure. The capital which has been given there is 20,000 crores, and the grant of 5,000 crores have been made. So I think roughly I've indicated the pitch that the government has laid for getting greater digital accommodation into our financial services. I've also tried indicating to you the spillovers of such digital digitalization, the benefits reaching the common man, benefits also to the institutions because it brings in greater transparency. It is only opaque at the level of the consumer or the customer to the extent that unless he gives his consent, nothing will be visible for anybody. And the way in which, therefore, a, a person living in a place which is not so serviced by a brick and mortar bank is also equally able to um, link himself with an institution, avail himself of the services, and therefore the deepening of the financial institutions and their services into regions which are in far-flung areas are better achieved, even for a country like India, which lives in different terrain, different topography, and different climatic conditions. So the future, as we see, of finance in India is going to be driven more and more through digitization of the banking and related services. It is more looked at from the point of view of the account keeper, the depositor, the person who wants the credit from the bank, and also from the point of view of expanding savings and borrowings in a synchronized fashion. It's not just looked at from the bank and bank's perspective, but this bottom-up perspective also expands from the customer's point of view. So both the ways it has helped in bringing greater ease of financial services. And that's the route which we will be further strengthening in the next 25 years. Thank you very much for giving me this opportunity.
Thank you very much indeed, ma'am, for that very informative, interesting address. And now may I invite Ms. Naina Kidwai, Chairman